All right, looks like the live stream software is finally working. Well, this was predictable. For every action there is an equal and opposite reaction. We know that from science. And here with central bank policy, what the Federal Reserve announced with their new inflation targeting policy at Jackson Hole, how they want to overshoot inflation, and how the dollar on the dollar index, which is mostly dollar against euro, the euro is at a 2-year high, and the dollar index is struggling to stay above 93 lately. It's been in a downtrend on the dollar index for quite a bit now. It was very predictable. I've been about this, that the other central bankers, the other countries that trade with the US would not just sit idly by, especially when in the European Union, the claim is that inflation is negative. Also with, like I said, the euro at a 2-year high. So we have now articles coming out about what is the European Central Bank going to do to retaliate. Are they going to do more quantitative easing? There was articles that came out in July predicting that the European Central Bank would do a lot more quantitative easing before December. I have those posted in the Wall Street from Main Street Facebook group. It's not on the screen of collage of articles there, but that is something that has been predicted for a while. But the Fed's recent inflation targeting, trying to weaken the dollar, is only going to accelerate and increase the odds that the European Central Bank will retaliate. Again, this is, from a historical standpoint, this is currency wars, this is beggar thy neighbor policies, and I have those summarized on your screen for those of you who are asking me, what is beggar thy neighbor? What are monetary and trade policies? Some of the mistakes that happened in the 1920s and the 1930s. The Investopedia article, if you want to read more in depth about this, that what came out from Adam Hayes on October 24th, 2019, will be below the video in the information and description section. But over the last 3 or 4 days from Bloomberg, there's been a number of articles talking about how central bankers and other trading partners with the US are now very upset about the comments that the Fed made at Jackson Hole, that Jerome Powell and the other Fed members made. Not only are current and former Fed members arguing that there should not have been any rate hikes at all between 2015 and 2018. Now, not everyone on the Fed agrees with that, but there are a number of vocal people at the Fed, and I covered this in yesterday's live stream show, current and former members of the Fed who said there should have been 0 rate hikes from 2015 to 2018. Just ridiculous. Shows how broken the system was and how there was really no recovery, no real economic recovery other than asset prices whatsoever after 2008 and 2009 for most of us. But just these other central bankers are so angry with the inflation targeting policies. And now you have Australia. This article came out on September 6th. Australia's central bank to expand quantitative easing may cut interest rates, economists say. And Australia is in a bind because of their China relations are deteriorating very rapidly over the last 5 or 6 months. They were the first country to call for an independent investigation into the Wuhan lab, and then a bunch of other countries joined them. And the Chinese Communist Party, in retaliation, because the Chinese Communist Party does not like things like that, they always overdo it on the retaliation, whether it's a tweet by the Houston Rockets general manager, and then over $1 billion worth of television contracts in China were canceled for a tweet. The Chinese Communist Party then has, over the last 3 or 4 months, has put enormous retaliatory tariffs and cancellations of purchase contracts on either Australian barley. I think there's an approximately 80% retaliatory tariff on Australian barley, on some of the largest Australian wine companies. The China News YouTube channels that do some of the best coverage, like China Uncensored, China in Focus, Joshua Phillips, Simone Gao, they've been talking about the retaliatory policies from the Chinese government against Australia, mostly because Australia wanted to do the independent investigation into the Wuhan lab, and then all the other countries joined them, and the Chinese government doesn't want that because they want their image abroad repaired. So economically, Australia's economy, not only are they having housing problems, but the Chinese government is really trying to dig the knife in with retaliatory tariffs and cancellation of contracts. I believe also a good amount of Australian beef purchases were canceled in the last couple months. So you have Australian wine companies, some of the largest Australian wine companies. There was some type of fake scandal there saying that they were ripping off Chinese, they were copying Chinese wine, or there was some type of either price gouging, or they were trying to undercut Chinese wine competitors. And the and the Australian wine companies were saying that this is a lie, that this is just a scheme by the Chinese government to make up bad things about them. But either case, these are policies that are designed to hurt the Australian economy with barley and wine and beef. So the Australian government then is going to have to switch, because basically, according to the China news agencies, they were given a choice, either to drop their insistence on a independent investigation into the Wuhan lab to look at the origins of the global pandemic, the coronavirus there, or they would lose a lot of their economic, let's say, trade deals with China, some of the investments and contracts that the Chinese government was purchasing. So they were given a choice, either to drop that or they would have to go to the US. And I think the China news agencies, the China YouTube channels that cover independent China news are saying that the Australian government chose to go more towards the US, which is going to be very messy because there's a lot of Chinese investment in real estate and elsewhere all over Australia. So the Australian central bankers, they're using the same playbook as pretty much all the other Keynesian central bankers. And unfortunately, that playbook is to use a version of mercantilism or neo-mercantilism, is to try to weaken their currency to boost exports. So I've talked about this, that the inflation in the banking system increasing in lending is not the only way to get inflation. And we're seeing this start to play out now, where all these other countries, because of the U.S. policy, they're all starting to get angry with the U.S. Even though a lot of these other countries that have dollar-denominated debt, they benefit from a weakened dollar. I did a very long interview 4 or 5 months ago with Lynn Alden, where we talk about how the global economy really works, how the global economy is on a dollar standard now, and actually a lot of other countries benefit from a weaker dollar. But things are so bad in the global economy right now that everyone wants a weak currency. That's just how things are, and even more so now because the global economic pie is not growing, despite what the lies of these government economic data is saying, that the real economies are all shrinking. So the pie is shrinking, and you have politicians and bureaucrats all fighting over larger and larger slices, and this is why these politicians are talking about going after even more taxes lately. You're listening to politicians here in the United States and different states talk about increasing property taxes as the economy gets worse. You're listening to politicians like Joe Biden talk about increasing taxes on real estate. Joe Biden, out of the stagflate and tax and lie, the three main components, Joe Biden, if he is elected, is going to be very, very big on the tax component, a lot larger than Trump. So Biden is talking, for real estate investors that listen to this podcast, Biden is now talking about getting rid of the 1031 tax exchange, which is something that, if you're a real estate investor, has been going on for decades here in the US. There's been really neither party, to my knowledge, has talked about getting rid of it up until Biden recently. I don't remember any Democrats talking about getting rid of the 1031 tax exchange. In fact, a lot of the real estate investors I know are actually Democrats. So they were actually using the 1031 tax exchange to if you're not familiar with it, delays capital gains taxes. I think you have approximately 60 days to go and find another property after if you sold one property here in the US to switch it into another property, a larger property, and then you can keep doing this and delay your capital gains tax bill. So I have a number of articles here. I have the Australia central banker one about how they're going to try to weaken their currency. Clearly, they're going to have to do more trade with the U.S. and other trading partners if the Chinese government maintains the current stance or makes it worse and cancels more contracts or puts on more punitive tariffs. So they're going to have to figure out, but the normal playbook for a lot of these governments and a lot of these central bankers and PhD economists is to weaken the currency to try to boost exports. But we're in an environment now where all these governments are going to try to penalize imports. So they're going to try to penalize with tariffs or they're going to try to retaliate against one another because the global economy is contracting. And this is what very similar to what happened in the 1920s and 30s prior to World War II. Because a lot of other countries were in depression way before the US was. The US was saved for last. A lot of flight capital came into the US, and there was a blow-off stock market top in the US from 1927 to October 1929. And then the top blew off. There was a real estate bubble here in the US. If you're not familiar with that time, it was in Florida. There was a big property boom in Florida swamp area, and lots of condos and luxury apartments and condos in Miami Beach being built, and also swampland was turned into real estate. And then there was a ton of stock market speculation from regular people out there, kind of similar to what's going on with Robinhood traders. There was a bunch of regular Joes and Janes back then in the 1920s, prior to the October 1929 crash, that didn't know anything about stocks, but were borrowing stocks on margin because credit was easy to obtain and because stocks only went up. So unfortunately, a lot of the same historical mistakes from the 1920s and 1930s are being repeated. And if you read some of these articles that I will put below the video in the information and description section, like Australia's central bank to expand quantitative easing, may cut interest rates again, economists say. And again, this is designed to weaken the currency, to weaken the exchange rate. But the problem is, all of these countries are trying to do that. They are all in a race to debase. They are all trying to do this. Now, the currency wars may be worse with some countries than with others, like the dollar and the euro. Trump has called out the European Union and the European Central Bank over the last couple of years a lot on Twitter. And Trump has also called out the Chinese government, although the Chinese government uses a dollar peg, so it's not quite the same thing as what the dollar and the euro, the exchange rate, how it free floats and how there's still intervention. Dollar peg's a little different. I don't want to go into it on this live stream show. So you also have the European Union article, European Central Bank article that came out today. Christine Lagarde, head of the European Central Bank, has euro fighting options remaining, from rhetoric to rate cuts to try to do quantitative easing to talk down the European Central Bank. And all the different policy suggestions are here in the article. Actually, in the article, it says avoid a currency war. Yeah, right. Avoid a currency war. Yeah, that's going to be very difficult considering the way I see things playing out now and how worse I think things are going to get. And then you have the Bloomberg article, the Reuters article, from Yahoo Finance from a couple days ago, September 7th. Fed strategy shift, which is the higher inflation targeting policy. They want more stagflate and tax and lie. They want a weaker dollar. They want inflation to run hotter than the 2% target, to bind big central banks from Frankfurt to Tokyo. And then I have, if you're not familiar with Beggar, Thy Neighbor, unfortunately, a lot of the same mistakes are going to be repeated from the 1920s and 30s. What is funny, though, is Jim Rickards, who wrote this book and actually got me interested in learning about this time period and what really happened in the 1920s and 30s. He wrote the book Currency Wars, and he talked a lot in interviews about Beggar, Thy Neighbor. It seems he shied away from talking about this anymore, and he's saying that the U.S. is going to have really bad deflation and not inflation, so he's gotten off the inflation train. But the U.S. has to import a lot of goods and services. If they didn't have to import a lot of goods and services, they wouldn't be subjected to as much potential importing inflation with the currency devaluation and other countries putting on tariffs. Well, actually, other countries importing tariffs is on imports. So if the U.S. puts higher prices, or politicians put higher minimum wage laws, U.S. puts tariffs on imported goods, then this is going to put higher prices for the U.S. consumer and also higher prices into the supply chain for some goods that are made here in the U.S. So if there was a free market, if there was real free market capitalism without government, increasing amounts of government and central bank and bureaucrat and regulator intervention, there would be deflation. However, the more distortions, the more interventions, the more economic central planning, the more currency devaluations, the more tariffs, all these things, all these distortions, the more minimum wage laws, all these things are going to put higher costs in a lot of different goods and services. They are not going to be equal. So some consumer discretionary items may not have higher prices. The demand for them may collapse because the consumer may not have discretionary income for them. So it is going to create a lot of unintended consequences, a lot of distortions, but overall the effect is going to be based on the Austrian School of Economics, what they call the Cantillon effect, and a lot more stagflate and tax and lie for monetary trade policy. So welcome to dystopia, and there's the proof that all these governments are all trying to do stagflate and tax and lie, and beggar thy neighbor trade policies with the race to debase, currency wars, race to the bottom. All these other central bankers and governments and finance ministries and treasury departments of these other governments want a weaker currency to try to boost exports, to try to benefit their economy. But you can't have every single country trying to weaken their currency without enormous unintended consequences and enormous ramifications. The distortions and the unintended consequences, some of them are going to be very unpredictable.